You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVOL, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVOL Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we go beyond the traditional world of your Apple, your SPY, your Google, your Amazon options, and even your VIX, and look a little bit farther afield into what's going on the digital asset side. We're going to talk your Bitcoin, your ETH, your options, your futures, your SKEW, your volatility, your OI, all that good stuff, and a whole bunch more. My name is Mark Longo from the aforementioned network, as well as, of course, from the ever-evolving theoptionsinsider.com. Glad to see so many of you have jumped on the bandwagon with us here in the early days, the launch period here, the launch window of Options Insider Plus and Options Insider Pro. So much cool stuff coming up, including tomorrow, our second Pro Q&A session with the Flow Master himself. So if you want to see what's going on in the world of options flow, and there's so much crazy stuff going on in the world of meme stocks and AMC and everything else, I'm sure you have a million questions. You're already starting to flood in your questions for that session. Get them in soon. It's going to fill up. It's going to be live tomorrow, 1 p.m. Central, 2 p.m. Eastern. Of course, our pro members can get it on demand whenever they want after the fact via their exclusive podcast feed. So a lot of cool stuff going on there, of course, later this week for options oddities and a whole bunch of fun. And speaking of fun, we have a lot of fun to come on this program. So let's kick it off by rolling out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Maybe we should call it the Crypto Hot Seats, plural. Maybe we should roll out more than one because we have to squeeze a couple of people into that seat today, starting off with Travis Schwab. He is the CEO over there at EVENTUS Systems. Travis, welcome back to the Crypto Rundown program.
Mark, great to be back. Excited to chat today.
And also joining us, squeezing in next to you, Travis, so make some room, we have Michelle Bond. She is the Executive Director for the Association for Digital Asset Markets, a.k.a. ADAM. Michelle, welcome to the Crypto Rundown to you as well.
Mark, thanks so much for having me. It's great to join Travis in doing this today, so thank you.
And Travis has been on the network before, but Michelle, you're a first-timer, as we like to do with all of our first-timers. Why don't you go ahead and give our audience a little bit of an overview of your background in the digital asset space, as well as what it is you do day to day over there at Atom.
Absolutely. I'd love to. So I am the CEO of the Association for Digital Asset Markets. I joined as CEO in October of last year. I've spent my entire career working on financial services, policy issues. I'm a regulatory lawyer. I was on the Senate Banking Committee. I worked at the SEC as counsel. I grew up in private practice and law firms, and I ran regulatory affairs for Bloomberg, all prior to joining the fintech space. I then spent about 3 years in fintech before joining Atom, and I'm absolutely loving working for this trade association. It is a blast. Our mission is to foster market integrity in the digital asset market, and we are a private, nonprofit, membership-based association of firms that all operate in the digital asset industry. We have a variety of different members, and in fact, Travis EVENTUS is one of our members. I'm very excited to have them on board in our membership roster. We also have a lot of other, most well-respected names in the industry that are members of Atom, including Anchorage Digital, Cumberland, Galaxy Digital, Genesis, HRT, Paxos, BTIG, I mean, you name it. We have just an outstanding roster of firms, and we really work on market integrity. We have a code of conduct that ensures that our members are committed to the highest standards of market integrity, fairness, efficiency in the markets, and we develop that internally because we believe that institutional market participants have both the responsibility and the opportunity to really develop and codify an infrastructure for this space, because we believe it advances the long-term interests of the market. So that's basically Atom in a nutshell.
You picked a good time to join a digital asset association there, Michelle. I have to imagine things have been pretty hot and heavy of late, especially coming into 2021. This year has been, I think, unprecedented. Doesn't even go far enough to describe it, particularly when you're looking at it through the lens of the crypto markets. Of course, Bitcoin, the rise up and the tumultuous now ride back down. ETH, same thing. All these people getting into the space, the Musk controversy and Tesla and everything else, regulatory side, a new administration, a lot going on in your neck of the woods, Michelle. So I'd have to imagine just even in the last 5 to 6 months, the membership and the roster of Atom must have exploded, Michelle.
Absolutely. And we are growing exponentially. We actually just announced 12 new members. We have actually almost 30 members at Atom right now, which is still growing. So I'm excited about that. And we really are working on cutting edge policy work. So anything that the policymakers are working on, we're working on too. And that's not just in the US, but it's also at a global scale. So it's definitely a big job. We're working on tons of comment letters to regulatory proposals. We're looking at legislative initiatives, you name it, we're working on it. So it's certainly a big job. And honestly, I'm here, here today, coming off of the heels of a big conference that happened in Miami last week and over the weekend. And honestly, there's just a lot of energy and positivity in the digital asset space. And it was really great to see everyone, just over the past several days, and especially coming out of COVID, of course. But in any event, I feel like there couldn't be a better time to be in digital assets.
Well, speaking of conferences, you're right. All eyes were down on that event down there in Florida this weekend. Not a lot of really market-moving news coming out of it. A lot of people were hoping maybe something would drive a little bit of price action. But you guys, hot on the heels of that, have decided you need to kick off your own event called Shining a Light on Digital Asset Markets. It's coming up later on in June here. June 22nd and June 23rd. So why don't you give our audience a bit of a rundown of what you guys are bringing to the table with this event?
Yeah, we are so excited about our upcoming virtual conference, and it's Atom and EVENTUS co-hosting it. As you said, it's called Shining a Light on Digital Asset Markets. And it is a 2-day virtual conference that will be on June 22nd and 23rd, starting at 9 a.m. Central, 10 a.m. Eastern, both days. It is complimentary to attend, and we're really excited about this powerhouse lineup, which includes key influencers in crypto regulation, legislation, enforcement, markets, and we have some really high-profile institutional market participants that will be speaking. We'll have a wide range of panel topics. We'll have some fireside chats and keynotes. It's really a who's who of the crypto world. And we've had a lot of interest from major speakers. So we've actually had to add some sessions just to accommodate everyone. I can go through the speakers if you'd like and talk about the topics a little bit more, or, Travis, if you'd like, it's up to you. But we're really, really excited to be doing this event with EVENTUS.
I can tell your excitement is bleeding through the microphone here. Maybe Travis, we'll start with you because you guys are obviously sponsoring this event. What made you decide that you wanted to get involved in this event, Travis?
Yeah, this has been a culmination of our relationship with Adam and Michelle. Really, it's as she was talking to, the excitement around this asset class is overwhelming, right? It absorbs all the oxygen in the room, and there's a lot of interest, not just on the retail side, but across the institutional client base. All of our clients are looking to us, talking about how they can get involved in the digital asset space. And so for us, this effort really, working with Michelle, trying to figure out how do we educate this group of clients and intermediaries as quickly and as clearly as we can. And so that's really was the thesis and the genesis behind this concept. And so, she's done an amazing job along with our team in putting together a really industry-leading set of speakers and topics.
Well, Michelle, you have 2 days worth of sessions and event here. We obviously can't go through them all, but let's give our audience maybe some of the highlights. If you said, okay, here's your top 5, you can't miss. If you have to attend maybe these 5 speakers or these 5 sessions, which ones would they be, Michelle?
Okay, so we have several really exciting panelists and other speakers. So we have Michael Saylor, the CEO of MicroStrategy, confirmed. We're very excited to have him. We have SEC Commissioner Hester Peirce, also known as Crypto Mom.
Yes, the Crypto Mom herself.
Yes, the Crypto Mom herself. Very, very excited to have her speaking. We have Michael Sonnenschein, the CEO of Grayscale. We have really C-suite executives from just top firms in the industry: Anchorage Digital, Batuta, CBOE, Cumberland, Galaxy, Genesis, GSR, HRT, Multicoin Capital, Morgan Lewis, Parataxis, Paxos, Symbiont, WisdomTree, a ton of others. We have some really big names in the media and reporters, like, for example, Frank Chaparro of The Block and Forbes contributor Jason Brett, as well as other really well-known reporters. So we're really excited about that. We have a lot of other major speakers that are on deck that we actually can't share publicly just yet, but we will hopefully be in a position to do so very soon. And just to give you a flavor of just the types of things that we'll be discussing, we're going to be going pretty deep in the weeds on a lot of different policy issues, market surveillance issues. We'll be talking about digital asset market structure. We'll be talking about the evolution from traditional to digital. That's my background. That's Travis's background. That's the background of the policymakers and honestly of many of the speakers that we'll be having. So we'll be talking about that topic. We'll be talking about digital asset market infrastructure. We'll be talking about custody and trading. We'll talk about considerations from the buy side. Travis is actually going to be one of our speakers all throughout the conference, but also on the surveillance. We're really glad that he'll be speaking on the surveillance panel, surveillance of digital asset markets. We'll be talking about global crypto regulation. As you know, there is the U.S. policy side, but there's really just a ton going on globally. So that'll be a really interesting topic to be discussing. And also, one thing that I didn't mention earlier, but Adam has a code of conduct we're also, as a trade association, really the ones that are best positioned to one day hopefully become a self-regulatory organization in this space. So we will be talking about the SRO topic and potential new legislation on the, in the crypto, for the crypto market. So we'll be really covering a very, very wide range of markets, enforcement, and policy initiatives.
Interesting. You have pretty big plans here for Adam then. You want to become, dare I say it, the FINRA of the crypto markets.
That's right. That's right. We would absolutely love to do that. We are a prototype SRO. We're a standard setting body. And given that we have a widely, all of our members agree to adhere to our code of conduct. So that's something that we are already doing. So and actually our code of conduct is modeled off of the FX code. So it's widely adopted, and we're hoping to continue advancing market integrity through that. And in addition to hopefully becoming a full-fledged SRO one day.
Let me ask you that, because obviously I think when you come to traditional market participants, you named a bunch of trading firms and exchanges and others, and you approach them with the notion of becoming an SRO and regulation and surveillance and things like that. That makes a lot of sense to them, and I'm sure they're more than happy and excited to jump on board and sign the code of conduct and participate in something that could hopefully one day become effectively the FINRA of the crypto markets. But I'm curious for the more crypto-oriented side of the space, because that's one of the fascinating things about the crypto trading world is we have kind of these collisions of these two markets, the trading world and then the core crypto world. And they've traditionally been, let's say, a little bit more reluctant to embrace the notion of regulation and, risk surveillance and things like that. So how has that side of the space been to this initiative here, Michelle? Have they been receptive? Have they been excited about the idea of something analogous to a FINRA in the crypto space, or has it been a little bit more uphill work with them?
Actually, everyone has been really receptive. And I think the reason for that is because in order to see institutional adoption advance, and I think that's how the crypto markets at large will advance, I think the institutional players really want to see a framework that looks like something that they're used to seeing. And given that everyone's background is really like a traditional finance background, it helps to have a framework and some guardrails. And I think industry is really best positioned in order to be able to create those guardrails. Certainly, we see a lot of regulators step in, and, we see calls on, to Congress to come up with legislation to create regulation. I really think the industry is best positioned and closest to the issues to be able to be the ones to really set the market principles. And that's really what Adam has done. And I think that it's a huge responsibility, but it's also a way to advance our market space. So to me, we've had nothing but just overwhelming support for our code of conduct and for people to say, like, this is really the path forward here. And if you look at our code of conduct, it covers really like things that you would expect to see. I mean, it talks about trading and custody, clearing and settlement, and has principles for ethical conduct, and increases transparency to the public and to governments, and covers governance and compliance, risk management. And certainly, there are a lot of topics that are really top of mind, I think, for this industry. For example, whether a Bitcoin ETF will be approved. And one of the first questions that arises in, whether a Bitcoin ETF will be approved is, well, what kind of surveillance can be done in the markets? And that's why we're, grateful to have people like EVENTUS working on these topics, with coming from traditional markets, because that's what the regulators are really looking for.
Well, Travis, she mentioned you're going to be speaking for a couple of days on the issue of trade surveillance. That's what you folks do. That's your bread and butter over there at EVENTUS. So walk us through a little bit, what you're going to be talking about. Give us a little bit of a glimpse some of the nuggets you're going to be delivering over there at the conference over those 2 days. And also, from your perspective, some of the challenges and issues you guys have encountered as you're trying to take traditional regulatory type risk and trade surveillance that you can apply to the traditional world of stocks and options and futures, and the challenges of trying to apply that to the world of crypto, Travis.
Yeah, thank you, Mark. There are actually probably similar answers to the same questions. And so, I think just in general challenges, because we're going to discuss this during our conference, is, you have massive volume and volatility spikes within the crypto space that I'm sure a lot of your listeners are enjoying from a trading perspective, but it also strains the infrastructure, right? A lot of these exchange infrastructures are fairly new. And so they haven't been tried over decades like some of the traditional markets. And so you can see massive spikes in volume that can overload the matching engines, can overload some of the systems, which doesn't, give the best performance from from the end client standpoint. So I think that's been growing pains, and you're bound to see that, as this is such a new asset class, such a new set of infrastructures, that you have a lot of investment that's being made by so many different entities and different projects. But it's still new, right? People think, we're in the first couple innings. Well, I think we're still driving to the ballpark. And so, it's very early on in the process. And so whether it's a tweet from Elon or China saying they're cracking down on Bitcoin miners or whatever scenario, you have lots of strain on the infrastructure, which is going to then cause challenges downstream to firms like ourselves. And so a lot of it is getting that scar tissue built up, understanding those processes, and we're going to dive into all of those aspects of this business during the conference.
I like that. The scar tissue of the crypto market, Travis. I may have to borrow that.
You're going to bleed, Mark. You're going to bleed when you're on the edge. That's what happens.
I may have to borrow that. Hopefully your licensing terms are reasonable here on the network.
Yeah, of course.
Well, Michelle, you also made an interesting point about the regulatory side. You can't really talk crypto without the regulatory side. And it used to be this wasn't really the sexy stuff. It wasn't the thing people wanted to talk about. But that's not really the case in crypto. In fact, I was just at an event for my son's school this past weekend, and I was promptly cornered by a handful of dads who were A, trading crypto, and B, very quickly wanted to get into a discussion deep in the weeds on the nature of crypto regulation. How's it looking going forward? What does the new administration think about it? What's that going to mean for price action? So this is stuff that is getting out there well beyond any sort of reach that you would have expected a few years ago. So the regulatory issue is very much front and center for a lot of people out there trading this right now. It was a big part of the sell-off we saw recently out there. So you mentioned kind of the holy grail, the elephant in the room there, which is, of course, the ETF. We have seen some approvals in Canada. Some people were hoping that would maybe loosen the kimono a bit here in the U.S., and we would perhaps see a little bit more progress on that. I'm curious for you, Michelle, this is your day-to-day here, looking at the infrastructure and the regulatory side here, particularly in the U.S. What's your outlook for this year? Not just for the ETF, but are you hopeful? Are you optimistic? Are you getting signs from Gensler and this new SEC administration that they're going to be a little bit more open to the world of crypto going forward? Or do you think it's still a little bit too early to tell?
So actually, this is so funny. I love this story about your son and the dad, because I was down in Miami, and I actually got my hair done, and the hairdresser said to me out of the blue, "Hey, you do Doge?" And I thought it was the funniest thing. I mean, it is like,
isn't that the old indicator when the cabbies and the hairdresser start asking you about it? It's time to get the heck out of Dodge. Yes.
I know, right? So actually, there was a study last month that found that approximately 14% of Americans own some form of crypto. So that is, I thought that was actually really encouraging, just to see just the type of mainstream adoption. And I expect that these trends are going to continue, certainly as the technologies and the benefits are further realized. Obviously, as you said, one great way would be to see the adoption of a Bitcoin ETF. But as you know, I sort of briefly touched on earlier, it's also important that market actors behave in a responsible manner. We have our code, and we have market players coming together to ensure that there are standards and that those standards are adhered to. In terms of just the prospect of the Bitcoin ETF, yes, it has been approved in Canada. I think that's an awesome case study for the U.S. to be looking at. In fact, I was senior counsel in the Office of International Affairs when I was at the SEC. These regulators are coordinating. They work extensively together on supervisory cooperation. I have no doubt that they are talking. On the prospects of a Bitcoin ETF, I have no doubt that it will happen. The question is really one of timeline, and actually in Canada it was there's a Bitcoin ETF, but then there were 3 Ethereum ETFs as well. Typically speaking, it's just based on my experience in international policy, I've seen the U.S. tending to sort of lag Canada by about a year. So I'm hopeful that that's really going to be the case here. And you also have to think about just the fact that we've had a change in administration. So with Chair Gensler having, coming in, obviously he has to staff up. And and just last week he announced a new director of trading and markets, which is obviously a critical position for something like a Bitcoin ETF. So he's really staffing up with division heads, with his chairman's office. And then he's also coming into the agency at a time where there's really a lot of questions about GameStop and all kinds of different issues. So in all honesty, technically it could happen at the earliest, probably around Thanksgiving. I think realistically it's going to happen in 2022.
I'm on board with you on that. We did a poll for our audience earlier this year. I think it was around the January, February timeframe. And we asked them that question. Do they think they'll have a Bitcoin ETF approved here in the U.S.? And our audience was surprisingly optimistic. I think it was somewhere around 2/3 said yes, one will be approved by the end of this year. So I hope they're right. Well, Michelle and Travis, this was a fascinating conversation. Sounds like you have a lot of interesting things in store for your upcoming conference there. So if our listeners are intrigued, they want to learn more, perhaps register for this conference, where should they go? What should they do?
Yeah, so they can, Mark, thank you. They can go to eventussystems.com, EVENTUSSYSTEMS.com, eventussystems.com. You can register right there. Love everyone, all your listeners to get involved. Participation is, that's why we've underwritten this. We want everyone to be able to take advantage of this great content. So go to that site and check it out. And then just in general, if you want to learn about Adam, Michelle, why don't you give them your website address?
Absolutely. So our website is theatom.io. And we are super excited about this event, and we hope that everyone can join us. And many thanks to you, Mark, for having us, and to Travis for co-hosting and underwriting our event. We're really excited about it.
So check it out for yourselves there, listeners. EVENTUSSYSTEMS, 2S's.com is the place to go. You'll see that little pop up in the lower right-hand corner to register for shining a light on the digital asset markets in 2021. It's coming up June 22nd and 23rd. Check it out if you have any interest. Maybe I'll send those dads I was talking to. Maybe I'll send them to this conference as well. It's clearly, there are a lot of questions on this front. And Michelle and Travis, thank you for joining me today to discuss all this fun. I'm looking forward to hearing more about the results and some of the interesting discussions and conversations you had coming out of your conference in the coming weeks.
Thanks, Mark.
Great.
Thanks, Mark. Thanks, Travis. Take care.
Thank you. And now we have to keep on rolling. It is time for our next segment. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do exactly that. We break down the wild, indeed the woolly world of the leading digital asset. Talking about the big dog, Bitcoin, not quite as big as perhaps when we did our last show. Unfortunately, Crypto Rundown got caught up in some crazy scheduling conflicts over the course of the past few weeks. Of course, 2 weeks ago, we had the big Option Block 1000 episode spectacular. That kind of ran through the crypto time frame. Of course, we did talk a little bit of crypto on that show, so we kind of counted as a quasi crypto rundown. And then last week, of course, we were all off for the Memorial Day holiday here in the U.S., but now we're back hot and heavy, and a few things have happened in the world of Bitcoin since the last time we chatted. For example, the last time we were all here together on the show, 3 weeks ago now, it was at nearly 43,000. It was 42,901 kicking off our show. Coming into today's show, 35,583. So a wee bit lower. And of course, it got far lower than that. It flirted with 30,000 a few times there over the course of that interim span. So we're down about 7,300 points from our last show. And over the course of the last week, it got as low as a little bit shy of 35,000, about 34,800 and change out there. And as high as threatening 40K. So it seems like, at least for the last week and change, Bitcoin has kind of been a little range bound in that 35 to 40K range out there. Will it break out? Can it break out there? That's what, of course, everyone is waiting. Maybe we'll hear some more about that at that conference coming up in a couple of weeks. Of course, looking back, April, not perhaps the month that the hodlers, the Bitcoin devotees out there really wanted. The worst April in the history of Bitcoin. It was down around 8% on the month. That's the first losing streak since 2015 in April. And yeah, that's the worst April on record. First April to actually lose money since 2015 in Bitcoin land. So it's been a while since April's been a dark period. For crypto, of course, we saw a lot of things feeding into that froth on the downside since our last show. Of course, had Musk come out and seemed like having a bit of a second thought about his participation out there in the Bitcoin space, which is strange. I'm not one of these conspiracy theory. A lot of people have been throwing conspiracy theories at me ever since Musk started doing this about what he's really up to and all sorts of strange allegations therein. I won't go into all that madness, but it is interesting that someone who runs a clean, quote unquote, clean energy company, which is what effectively Tesla is, would not be aware of, the energy impacts of Bitcoin before he made such grandiose pronouncements and really talked it up to the world and really was half responsible for that march up from around the 45,000 level up to about 65,000. He certainly was a big cheerleader of that, then would turn around and talk it right back down to the point where you just heard Michelle and Travis talking about that big conference last week or this weekend, actually, in Miami, I believe it was. He was persona non grata there. They were pretty much, if there was one theme of that conference, it was everyone getting together and slam Musk for his now coming out and seemingly wanting to pile on all things Bitcoin. So a lot of fun, a lot of interesting things going on, a lot of vol. One of the other narratives we've had on this show for a while is, wither Bitcoin vol. Can it languish? Was it starting to become truly a digital gold, at least from a vol perspective? Would the vol get low and stay low? Would any spikes be very short-lived and come right back down, which is a pattern we've seen quite a bit with gold volatility? And at least right now, the answer is, I guess, kind of yes and kind of no. On our last show, we were much more elevated. We were north of the triple digits. We're at 124% implied volatility. We're just starting to come really into some of the teeth of that sell-off there. It spiked even higher in between our shows. In fact, almost a week or so, not even, about 5 to 6 days after our last show, it spiked to the highest we've seen in a while, and certainly the highest since our last show, of about 163%. So that's getting back to the Bitcoin we all know and love, the one that was parodied around the world as this extremely volatile asset. And what's it looking at right now? Well, like I mentioned, it's kind of range bound right now. So that vol has come in. It's pretty much been cut in half from that high on May 23rd. We're down to about 88% now. So still frothy. If you look at your average equity option out there, you throw an 88% vol on it. That's pretty rich. But it's nowhere near the effectively 2x level we saw not too long ago. And it's even 40 points below where we were on our last show. So there are spikes. They certainly can spike again to high vol levels. It just seems like they're kind of short-lived again, which is fascinating, interesting to watch. Doesn't seem like we're at this structurally new higher paradigm of Bitcoin vol. But we'll see if there's another aggressive move. If it breaks out of this range it's been in for the better part of the last week, aggressively in one direction, we could see a lot of that change. A similar story for the SKEW. The SKEW has kind of been all over the place since our last show, as you would imagine, because Bitcoin has been all over the place since our last show. On our last show, it was positive, about 6 1/3 to the good. It spiked to about I'd say since then, it's been pretty much mostly predominantly negative. As you might imagine, a lot of dark side action out there in the options since our last show. It rallied back up to about the highest it's been since that level was about -0.5. That was on June 3rd, and it's kind of come right back down to being very predominantly negative again. It's about -6.5 right now. So it went pretty negative right after our last show, after that 6 and the third. And then it kind of spiked back up to about -0.5 and right back down to about where it is right now, -6.5. So hasn't been able to really turn positive since our last show pretty much. So a lot to keep an eye on there. Open interest out there. Our last show, we had about 176,000 contracts open. This show coming in, again, this is on the big platform, which is Deribit. Right now, it's about 151,000. So some of that OI coming off the board. Again, not entirely surprising. We did blow through a few strikes to the dark side since our last show. Remember, we were up in the 60,000 range not too long ago. We blew through that, blew through 55,000, 50,000, 45,000, 40, now down to 35. We're threatening 30,000 for a little while there. So you're talking about a 50% roughly sell-off. That's going to take out a few strikes with it. As people have puts on, they're going to take them off when you blow through them. That's what you should do. So we haven't really reestablished any of that OI yet. So down about 20,000. The call to put breakdown calls were about 91,000. So that's down about 6,000 from our last show. We've seen a lot fewer puts as well, down to about 60,000. That's down about 15,000, which again is understandable as you blow through all of these strikes to the downside. If you're not taking your puts off, you're doing something wrong. You bought them for a reason. Take them off. Take the money while the market is giving it to you. Looking at where the options are lining up from an overall OI perspective and coming in on the monthly expiration first, Bitcoin looking a lot more like ETH right now, where it's kind of all quarterlies all the time. May had about 40,000 contracts open on our last show. Clearly, those have gone the way of the dodo now. So June has moved up to take the crown, 60,000 for the number one spots, up about 9,000 from our last show. DECE at about 26,000. That's roughly unched up about 1,000 or so from our last show. And then we have SEP now moving in to that number 3 spot with 22,000. So it's, again, just like ETH, all quarterlies all the time. June number 1, DECE number 2, SEP number 3. No love for any real non-quarterlies. July is kind of on the board, but it's far behind even September. So right now, it's kind of all quarterlies all the time, which is also kind of interesting out there. In terms of notional open interest, how much value is actually open on these options out here. Obviously, that's come off quite a bit since our last show as well. On our last show, there was about $8 billion worth of notional OI open on Deribit. If you added up all the venues together, it was a little over 9, about 9.2 billion. Coming into today's show, much less, about 5 billion worth of notional value on Deribit, about 5.8 billion open total as well. Of course, the overall value of Bitcoin has declined precipitously since that show as well. So all of that kind of playing into why we're seeing so much less notional OI out there right now. We've also seen a lot less volume, which may surprise some people. We obviously saw some big spikes during the kind of heat in the teeth of the sell-off. The most active day was exactly actually our last show day, May 17th. That was the most active day we've seen in Bitcoin options pretty much before or since. We saw about 3 billion worth of notional value going up that day. And that's been pretty much it. Everything else has kind of fallen off a cliff. We did see one other spike a few sessions later, let's look about the 19th, where it did a little over 2 billion. And then it's kind of about it. They struggled to hit 1 billion pretty much any other day since. And the most active day over the course of the past week was a few days ago, 723 million worth of notional. So it can't even really hit 1 billion. It's been a couple of weeks since it's even hit that. So much quieter than you might think on the Bitcoin options front. Again, I think a lot of that going back to that kind of range-bound environment we're in, where folks are kind of waiting for a breakout in one direction or the other before they really start putting on more size out there. Looking out there, before we get to that, let's get to the strikes, because that's always a fascinating thing to watch. Remember, on our last shows, kind of all about the par strikes, aka the 100,000 and the 80,000 strikes. Those seem much more distant this show than they did a few weeks ago. So let's see how that's changing up the hot strikes out there right now. The number one open sizable strike, and I put sizable in quotes because it's smaller than it used to be, is now the 40,000 strikes. That's kind of moved into the top spot, about 9.8 thousand open. That's only down about 400 or so from our last show. So that's actually pretty close to where it was this time on the last show, which again, we're kind of broke through the 40,000, but now we threatened it a few times since then again. So 40,000 makes sense why it's still on the radar. Number two, which may surprise some folks, Still the 100,000 strike with nearly 9,000 contracts open, 8,900. That's down about 600, so not quite as much coming off that strike as you may have expected. Those folks, maybe they got caught flat-footed, didn't have a chance to get out, or they're still holding out there. They're still holding out hope for that par strike. Either way, the 100,000 strike, still the number 2 size open strike out there in Bitcoin land. Then we get down to some more relevant strikes again. The 50,000 strike, number 3, with about 8,800. That one's taken a drubbing. That's down nearly 4,000 contracts from our last show. Again, we blew pretty aggressively through that strike, so not going to surprise me too much that people are taking some of those off, particularly on the put side. Number 4 is the 60,000 strike. Again, also coming off quite a bit. It's down to about 7,300 contracts. Now it's down over 3,000, about 3,200 contracts from our last show. And again, we blew pretty aggressively through that one as well. So not surprising some folks are taking that off. And rounding out the top 5, in case you were wondering, are there still any crazy flyers open outside of the par strike? And yes, the 80,000 strike is still open with about exactly 7,000 contracts on that strike. That's come off a little bit more than the par. That's come off about 1,600 contracts from our last show. So some folks got the heck out of Dodge, but not all of them by a long shot. There's still 7,000 contracts open. So there's your top 5 in Bitcoin right now. 40,000, 100K, 50K, 60K, and number 5, the 80,000 strike out there. Going on out to CME land, you've been listening to our TWIFO program. You know, they've had some announcements in this space of late, including the launch of the much anticipated smaller Bitcoin futures contract, the micro Bitcoin future. So that's hopefully going to give a bit of a shot in the arm. Didn't do a lot of shot in the arm to the options volume over there. They had a few days over 100 contracts since our last show. That's really kind of about it. Not a ton of options paper lighting it up. And I guess that's kind of commensurate with what we're seeing on Deribit as well. Outside of those few very aggressive days, wasn't a heck of a lot of paper over the course of the last couple of weeks. The futures, pretty active on the 19th. Again, that same day we saw the spike on Deribit. They did about 32,000 contracts at CME then. Every other day has been much less. The most active day over the last week was about last Friday with about almost 9,000 contracts. So much less going on out there. In the futures front, a similar story for the micro futures. They got off to a good start. They did almost 100,000 contracts on that same day on the 19th. They did about 94,000 contracts. Remember, that's a much smaller beast than, I think it's 1/50th the size of the big, meaty, beefy CME Bitcoin future. So apply that divisor there, but still decent paper. Then every other day has been much less. Most days are 30,000 or less out there since. So not a lot of paper lighting it up out there. Same thing on the Ledger X front. Our new friend, the Ledger X bot. Yes, there's a Ledger X bot now watching Ledger X. So if you want to keep an eye on those, it's kind of interesting. Saying about 7,000 contracts traded on them over the last 24 hours, with the Bitcoin Mini 55,000 call being the most active contract with 700 of them. So there you go. A few interesting bots, even though our old friend, the backed volume bot, seems to have gone the way of the dodo, which is a shame. But you know, it hasn't gone the way of the dodo, at least not entirely, is the altcoin universe. So let's get to it.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. Let's dive right in. Let's go exploring. Let's start where we like to do with the top 10 market cap out there. Things certainly a lot lower than they were this time on our last show. Let's look at the number 10. Number 10 this week, Uniswap, with about 14.75 billion worth of notional out there. Number 9, Polkadot, 22 and about a half billion. Number 8, USD coin, everyone's favorite USD coin, 23 and about a little over 23 billion worth of market cap. Then we jump up a bit to number 7, XRP. You know, it's hard to really get these days for a lot of you out there in the US. I know I've been hearing your complaints. About 43 billion worth of notional still out there as we're seeing this will they, won't they dance with the SEC continue out there in XRP land. Number 6, it's the old Doge. You heard Michelle say her hairdresser is asking her about Dogecoin these days. So we have hit that saturation point, listeners, where the cabbies and the hairdressers and everyone else all asking about the Doge. That's good for $46.5 billion. Number 6 on the market cap list. Number 5, Cardano, 52, almost 53 billion. Number 4, Binance Coin, 58, almost 59 billion. Number 3, it's Tether, 62 and about a quarter billion. Number 2, it's ETH, down to 313 billion. And the big dog, not quite as big as it used to be. Number 1, Bitcoin. Some may find some value, some humor value in this market cap of 666 billion. So the number of the beast in the market cap land. Some may find that appropriate. It's interesting how no longer the 1T level that was so predominant and so controversial out there in Bitcoin land for so long. Now we're back in the paltry 666 B level. Let's go on out now to the number 2 out there, which is ETH. ETH's had quite the roller coaster run since our last show as well. Last show was at 3280. Remember, not that long before that, got up to about 4,500. To the dark side, it broke through 2,000 ever so briefly, got down to around 1,700 and change, I believe, before rebound. I tried to get some down to 1,700. I kind of missed it. Like, one of those things, you get busy with all of that. So if you got that 1,700 level, good on you out there. Coming into today's show at about 2,700, so about down about 580 or so handles from our last show. Got as high as around nearly 2,900. That was last Thursday, and as low as about, right around the 2,500 level, 25 and a quarter or so. That was back on Tuesday. E-futures, again, similar trajectory to what we saw out there on the Bitcoin futures. Decent days earlier in the mad teeth of the sell-off, then kind of quieting down from an overall volume perspective, but still doing a decent amount of paper. So I wouldn't be surprised if we start seeing some rumblings about options down the road here for the micro Bitcoin and or the ETH. That would certainly be welcome, I know, to a lot of you out there who like a little bit more nuanced, more bite-sized contract, and also to trade some options on an exchange that you've heard of and probably will be there when the other side of your trade comes due. That's always a nice thing to have in your back pocket. Let's break down ETH from a vol perspective. Now, ETH always structurally more volatile than Bitcoin, and it certainly has been living up to that reputation since our last show. On our last show was at 131%, so not that far away from where Bitcoin was on our last show, but in between it got a lot higher, spiked up to 217.5%. That was actually a little bit later than the Bitcoin spike. Bitcoin spiked on May 19th. ETH hit its vol high on May 23rd, so about 4 days later. Now it's back down, still in the lofty triple digits range, though, at about 116% right now. So ETH seems to want to stay in that structurally more volatile realm for the time being. But again, ETH has been moving pretty aggressively of late, so it's hard to argue that those vol levels aren't merited. SKEW-wise, on our last show, it was about a -2. It spiked in the other direction up to about 26.5 on May 19th, and then came right back down to about a -5.5. That's as we saw that aggressive sell-off and equally aggressive rebound there for a little while in there. Obviously, that SKEW was swinging wildly out there. Overall, on the volume front, kind of a similar story in ETH options to what we saw in Bitcoin options. Big, explosive amounts of volume. We saw ETH actually tie its overall notional volume record on Deribit. It hit about 1 billion on May 19th. And that was kind of the big day for Bitcoin as well. And then it's done not much since then. Most days this week, it's done about 200 million worth of notional or less. So it's been kind of quiet times. Again, as ETH's been bouncing around a little bit, but obviously not enough to instigate a new wave of trading either north of that 2,500 strike or maybe south of that 2,000 strike. Going to need a little bit more action in one direction or the other, it seems like, to really kickstart that volume out there again. Coming into showtime, the OI out there in ETH land, again, taking a big hit since our last show. Calls at about 804,000 contracts open. That's down about 72,000 from our last show. And the puts just a tick under 550,000. That's down about exactly 200,000 from our last show. And again, not surprising. We've blown through quite a few put strikes since that show. So a lot of the people taking those off, which is perfectly normal, perfectly understandable options trading activity. In terms of the OI on our last show, about almost 1.6 million, about 1.57 million contracts outstanding. Coming into today's show, a lot less, about 1.3 million out there. Again, as we've seen a lot of those strikes to the downside, going the way of the dodo. Similar story from the notional value of that OI. We were at about 6 billion on our last show. Today's show, about 4 billion. So seeing a lot of that notional value coming off the board a little bit as well. Speaking of things going off the board, May went off the board since our last show. Took a lot of the size OI with it. June is now the number one. We have a similar tale here to what we had in Bitcoin there, where it's kind of all quarterlies all the time. The number one expiration month out there in ETH right now, June, 567,000. That's actually up since our last show, 69,000. So we saw an increase in June. Not much anywhere else. DEES, 283,000, up a few thousand contracts. And then SEP is 193,000. That's kind of a new addition to our top strikes, or our top months here. In terms of strikes, let's see if those have changed a lot since our last show. The number one strike, if you had to guess right now, really quickly before I say it, listen, what do you think the number one? What's your gut tell you? You know, we're trading right around that mid 2,500, 2,700 level. You think it's going to be 2,500, 3,000, 2,000, something else crazy. Well, if you said 5,000, you were correct. It's 72,000 contracts open for the number one strike, which is the 5,000 strike, even though that's down about 17,000 from our last show. So all the folks who were piling in thinking 5,000 was the next stop to the upside, not so much. They took about 17,000 of that off, but still good enough for the number one size position in ETH options right now. Number two, the comparatively more reasonable 3,200 strike, 66, almost 67,000 contracts open there. That's down about 22,000. So the top strikes have been paired quite a bit since our last show. You know what number 3 and number 4 are? They haven't changed. It's the 400 strike and the 320 strike, both of them with about 63,000 contracts open. Whoever has that on doesn't seem too inclined to want to take it off. They effectively have an ETH future now, so they're going to ride it apparently until it goes away. And then number 5 is the 480 strike, also pretty deep in the weeds there with about 52,400 open. So in terms of relevant strikes, it's really only the 5,000 and the 3,200 strike, and you could probably take issue with one or even both of those, exactly how relevant they are right now. Looking at some of the other altcoin really quickly, Ripple taking a bit of a break, down about 55 cents from our last show, so not exactly a good run for XRP, as they've seen, of course, again, this will they, won't they, back and forth with the SEC, taking a bit of a won't they turn since our last show. But the proponents out there and the diehards think this is something that can still fight its way through. So we shall see out there in the land of Ripple. Good luck getting it if you want it here in the U.S. Bitcoin Cash down about 410 handles from our last show. Bitcoin SV down about 117 from our last show. And of course, Michelle's hairdresser's favorite, the Dogecoin, down about 12.5 cents since our last show. And all right, now let's wrap it up with some of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Let's do it. Let's see what you folks have on the brain. Got this one here from Mikos. Mikos wants to know, what are your thoughts on the carbon footprint of some of these quote-unquote coins out there and how that may impact trading going forward? He sent a link to a story, I believe this was on Market Watch, breaking down a battle between Musk and Jack Dorsey, kind of pro and con on Bitcoin, but also analyzing some of the environmental impact of these coins. They have some interesting data here. Let me just share this with you, listeners. They say Bitcoin's proof-of-work blockchain protocol draws more electricity than nearly any other crypto. So I'll break down some of the numbers for you. They broke it down by kilowatt hour consumed per transaction. The lowest may surprise you, our old friend XRP. Maybe that's why I got a little bit of a lift there in between shows before kind of selling off again. It only consumes 0.0079 kilowatt hours per transaction. Number 2, the much maligned Dogecoin. You can't really slam it for its environmental impact. Only about 0.12 kilowatt hours consumed per transaction. Then we jump up quite a bit to Cardano at about 0.55. Litecoin jumping up a whole bunch more to 18.5 kilowatt hours. So no more fractional. You're talking multiple kilowatt hours. Bitcoin Cash even more, 18.957. Then we jump up another order of magnitude almost here to ETH, 62.5. That's rough. That's going to be for all the holders out there. And I certainly like myself some ETH as well. That long term is going to look kind of rough unless they find some way. And there is research, there are ways people are talking about trying to mitigate some of this energy consumption. But the big dog, we're jumping up again. Now we are jumping up an order of magnitude. We're jumping up to Bitcoin, 707 kilowatt hours consumed per transaction. So you got XRP on the downside at 0.0079, and you got Bitcoin on the upside at 707. So orders of magnitude different. So yeah, that's an issue. And again, I said it at the top of the show, I was a little surprised because I thought everyone kind of knew this. I thought this was common knowledge that Bitcoin was a bit of an environmental issue, hence why we see so many of the miners migrating to these areas where they can arb the power infrastructure and get cheap electricity. That's kind of what the Bitcoin mining play now is, just a way to arb power. We used to see it in the early days of this show. Whenever we ran the analytics for the crypto rundown, we saw it was huge. Not in the traditional market centers that most of our other shows are, your New Yorks or Chicago's and that sort of thing, but out in the hinterlands of far eastern Washington state and far southern Illinois and all these other areas where no one really was, A, and B, power was very cheap. So crypto miners were all concentrated in those areas and they were devouring the show en masse. So this has kind of been a function of crypto and certainly of Bitcoin for quite some time, which is why that kind of surprised me that Musk was so late to that party. It was a big topic of conversation at that conference this week. People are looking to tackle this because it's kind of hard to be pro-environmental and also be a huge champion of something that consumes this much energy. So it's an issue. Folks are looking at ways to try to combat it. Hopefully, the next wave of cryptos, or perhaps we'll find some ways to improve the existing ones, will certainly take this into account, because this is going to be the de facto, this is going to be the norm, dare I say it, the currency of the future. A, it can't have a near triple-digit volatility, and B, it can't consume 707 kilowatt hours of energy per transaction. That's just not sustainable. So I think that carbon footprint, Makos, to answer your question, a long way around, I think it is going to have a lot of impact on the trading going forward. Look at what we've seen on just the traditional stock world, right? How many people have gotten into, the ESG and all those types of movements and trying to find socially and environmentally responsible ways to invest. I wouldn't be surprised. In fact, we're seeing it already making its way into the crypto world. So I think the honeymoon is over from that perspective. People are starting to look at this, starting to ask these hard questions. Look, Musk just did it very publicly and with great effect to the downside. But I think this is the question a lot of people are asking. So I think this will impact this going forward. And it has, in the near term, it has certainly caused a lot of volatility in the very, very short near term. It seems like that's kind of been squeezed out now. We'll see if that can contribute to the next wave or whatever it will take to break us out of this range we're in right now. But I think definitely we have not heard the last of this, Mikos. Great question. All right, everybody. I want to thank you for joining me here on the Crypto Rundown for this week. I want to thank our guests as well, Michelle and Travis. Check out their upcoming event, Shining a Light on the Digital Asset Markets 2021. You can go over to EVENTUS Systems and register for right now. I do believe it is a no-cost event, so check it out. It's virtual. EVENTUS Systems, 2 S's. People have questions about what the future holds from a regulatory, from a vol trading, surveillance, risk, all these types of perspectives. They're going to talk about it. So June 22nd and 23rd, EVENTUSsystems.com to learn more. It pops up in the little lower right corner. Register. You're off to the races. And, of course, I want to thank all of you out there for downloading, streaming, and subscribing, for asking questions about the energy footprint and everything else, and for listening live. Stay tuned for tomorrow. Got a fun one coming up with the flow master himself, Mr. Henry Schwartz. So I know a lot of you have questions about all this crazy meme 2.0 action, what's going on with the SKEW, the volatility, how should you be trading it, how should you be analyzing this data, what does a SKEW and X percentile really mean for you in practical trading terms. We're going to break all that down and a whole bunch more with the guy who's got all the data. He's the guy who does the State of the Industry panels every year at the OIC, so the whole industry goes to this guy. He's kind of good, even though I won't tell him that to his face. He's the flow master. He'll be joining us tomorrow, 1 p.m. Central. If you can't join us live, make sure you get those questions in. A lot of you already have. That hour is starting to fill up with the questions, so get them in quick if you want to get at the flow master with your questions. Then we'll be back again, of course, the rest of the week. You got boot camp on Wednesday, OPR going live to tape on Wednesday, so you'll see it on the network. Thursday, episode 2 of the option block, as well as This Week in Futures options, where if you're listening to this show, check out TWIFO. We talked some crypto on that one as well. Friday, Vol Views, and then the return of Options Oddities. I do have confirmation that the Rock Lobster will be joining me on that one, so getting some of the band back together there, which will be fun. Then we kick it all off again next week with another episode of the Crypto Rundown.
This program is brought to you by Genesis Volatility, also known as GVOL, home of institutional-grade crypto options analytics. Whether you're trading CFI options or DeFi options, cryptocurrencies move. Use GVOL Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.